Hey everyone, welcome to this week's episode of Market Watch. I'm Jason Zwolak of the Zwolak Group with First Team and Christie's International Real Estate. I hope you all had a great week. For those of you tuning in for the first time, each week I tackle different real estate topics, including local market updates, all in the hopes of helping you navigate the world of home buying, selling, and investing. In the past week, there's been a lot of talk about a housing recession. July's closed sales dropped significantly. Here in Southern California, sales were off 37% year over year. As a result, we heard from experts across the nation exclaiming that the housing market is officially in a recession. Unfortunately, way too many people will jump to the conclusion that values are going to drop like they did during the Great Recession. The recession that experts are talking about is a major drop in sales, fewer purchase and refinance loans, and an overall drop in the number of transactions for everyone in the real estate industry. Yet a recession doesn't mean that housing is in crisis and that values will fall. Only 2 of the last 6 recessions had a drop in home values, the savings and loan scandal of '91 and the Great Recession in 2008. Remember, both of these were directly caused by the housing industry. The other 4 recessions resulted in home values appreciating. Every recession is different. During the Great Recession, unemployment skyrocketed and housing was a huge house of cards built on years of subprime loans, pick-a-payment plans, teaser rate adjustable mortgages, and fraudulent lending practices. It was not a shock that housing values sank. This recession will be completely different. So far in 2022, the Orange County housing market has slowed from an expected market time of 19 days in early March to 65 days today. However, the slowing has stopped. In fact, the market time has dropped by 7 days since climbing to 72 days a month ago. The reason that housing has shifted but is not on the verge of collapse is because of basic supply and demand. On the demand side, buyer activity has been down all year, peaking early at the end of March. It was down 28% from last year's peak. Compared to the 3-year average peak prior to COVID, this year's was 19% less. Even with the recent rise, today's demand is at its lowest level for this time of year since 2007. This level is more typical of the slowest time of the year in January. Today's demand is down due to mortgage rates rising from 3.25% at the start of the year to 5.72% today. This has severely impacted the buyer pool because of the massive drop in affordability. Yes, demand is low, but is offset by the fact that inventory is historically low as well. It looks like the inventory hit its peak a couple of weeks ago, as it dropped by 39 homes in the past 2 weeks. The issue is that the inventory is still far below normal for this time of year. Even though it's higher than last year at this time, it's still the second lowest reading since tracking began in 2004. With demand dropping, the question is, how has the Orange County inventory already peaked? The first factor is that demand has stabilized after slowly dropping since the end of March. The second factor, and more importantly, are fewer people deciding to sell. Basically, with fewer homes hitting the market, inventory isn't able to grow fast enough. From January to July of this year, there have been 17% fewer homes for sale compared to the 3-year average prior to COVID. People aren't moving because they are locked into an incredibly low fixed mortgage rate. 72% of all homeowners have a mortgage rate at 4% or lower. 55% have a rate lower than 3.5%, and 34% are below 3%. If someone sells and buys a replacement home, they're going to be paying a much higher rate and most likely higher property taxes as well. Therefore, homeowners are staying put. They may not be in love with their home, but they certainly are in love with their loan. Another factor that has led to our low supply is that many sellers who have been unable to sell have decided to pull their homes off the market. For the first couple of weeks of August, the number of homes that have come off the market without success is up 127% compared to the same time last year. Orange County's inventory was down 1%, dropping 39 homes over the past 2 weeks. Last year, the inventory was 37% lower than today, and the 3-year average prior to COVID had an extra 2,693 homes, or 67% more. There were way more homes to choose from back then. Demand increased by 2% the past couple of weeks. Last year, demand was 46% higher than today, and the 3-year average prior to COVID was 39% more than today. With inventory decreasing and demand increasing, the expected market time in Orange County decreased from 67 to 65 days. Still a slight seller's market. The luxury inventory of homes priced above $2 million decreased by 2% or 17 homes, while luxury demand increased by 4%. With demand going up, the expected market time for luxury homes decreased from 125 to 118 days. Year over year, luxury demand is down 9% and inventory is up 32%. The expected market time last year was stronger than today at 81 days. For homes priced between $2 and $4 million, the expected market time in the past 2 weeks decreased slightly from 99 to 98 days. For homes priced between $4 and $8 million, the expected market time decreased from 179 to 159 days. And for homes priced above $8 million, the expected market time decreased from 320 to 225 days. At 225 days, a seller would be looking at placing their home into escrow around April of 2023. The bottom line is the giant drop in demand is being matched up against an extremely low supply of available homes. There are fewer buyers shopping, just as there are fewer homeowners selling. This will continue until mortgage rates shift either higher or lower. Until then, the battle between supply and demand will continue. If you like this video, make sure you do me a favor and give it a thumbs up. And don't forget to subscribe so you're notified every time I post. If you have any questions, send them to me directly or write them down in the comments below. I'll make sure to answer them as I'm here to help in any way that I can. I hope you all have a great weekend, and until next time, take care everybody.